What's up, you guys? Steven Vanderhook back again. Today, we're leaving the debt, we're leaving the equity markets behind, stocks, bonds, that ain't for us. We're going into the exciting world of what could be the best investment of 2020, sneakers. I've talked a little bit about collectibles in the past. We had that video on Lego, link in the description. You can go watch that video if you haven't seen it yet. But what we're going to talk about today is a totally different market in the world of sneakers. Now, the secondary market for sneakers, meaning secondary market, me to you, peer to peer, is massive. It's $1 billion industry. It's huge, and there's a major profit margins to be tapped into. We're going to talk about this today and see, is this too good to be true, or is this something you could actually leverage? When it comes to secondary market investing of any kind, whether it's sneakers, watches, albums, comic books, I don't care what they are, no matter what it is, you got to recognize this is all secondary market. It's all peer-to-peer. It's all very volatile. It's all very risky by nature, because most things, the only reason they have the prices they have is because other people just want them for that price, but they don't actually give you any money. They're not dividends, right? You're not buying like an asset. You're not buying a business model, right? You're buying just a commodity. So we do need to recognize that yes, any of this it's all risky. Anything that has to do with collectibles is all risky. That doesn't mean it can't be tapped into and can't be part of your investment portfolio. So once you get into the financial step of investing, right, you've paid off your debt, you've built up your savings, you've started to invest, you should still have traditional stocks and bonds. That should be part of your investment portfolio, of a good diversified portfolio. But part of your portfolio can be a little risky, and this is where you can start to have a lot more fun, because you really get to use all of your insights of a certain industry, especially if it's one you enjoy. That's number one. You got to enjoy the industry. If you don't love comic books, don't invest in comic books, because it's going to be torture. Or if you love comic books, or if you love Air Jordans, you love sneakers, you love Space Jam, you love basketball, this could be a great market for you to invest into, because it can be so much fun for you. And that's a big part of this, is that when it comes to secondary markets, it's risky, but it's fun, and it should be just a small portion of your investment portfolio. For me, I don't make collectibles any more than 10% of my personal investment portfolio. Even that, some people might say is a little high. Whatever, I'm young, I can take on a little more risk, but it's a lot of fun and I enjoy it. Before we jump into all the numbers and good examples and to see what really this can return, I do want to just make it clear, I personally do not have any investments in sneakers right now. This is something maybe I'll dabble into in the future. Again, right now, I don't really have the passion for it. I think Air Jordans are sick. Who doesn't? But I'm not really invested into it, so just want to put that out there. Let's jump on in. This first example is the Jordan 1 Retro Highlight Smoke Gray. This shoe is sick, right? Here's a picture of it. You all love it. You can all see how cool it is. And you'll see right here, the last sell, this is all from StockX, right? It's a huge marketplace for collectibles and for sneakers, things like that, a peer-to-peer website. But the last sale was for $246. Now this shoe retailed for $170, and it released just 3 weeks ago on July 11, 2020. So in only 3 weeks, you can see a huge major increase in uptick from retail price. And that's what a lot of people do. A lot of people just flip shoes from retail, from release, and within 1 to 2 months, they've already gotten rid of it. They've already left their position, so they're flipping. Other people, they buy shoes, and they might buy into them from secondary. They didn't get them at retail, so they might be buying them at $246, either to wear them for themselves or to hold for the long haul. So you have different types of investment strategies here. You can see the traditional flipping. It's kind of the equivalent of day trading, right? It's a lot more fast transactions versus people who are willing to buy and hold. And they say, I'm going to buy this shoe and I'm going to wait 5, 6, 10 years to sell it and see what I can get for it over time. So you definitely have two different markets. And one thing to consider if you're thinking about more long-term investing is that if you keep them brand new, I mean new, not I wore them to a party once, I mean new, right? You don't even lace them up. They smell new. You keep them sealed in the box. Every single time someone else does wear their pair, that's one fewer pair of shoes that's on the market, right? That's brand new, right? So you got to think the supply will dwindle over time from that specific release. Now they can always reprint a shoe, right? And they can always go back and remake it and restock it. So that's something that can happen. But as far as the 2020 restock, the 2020 stock of this shoe, every single time someone wears a pair, it's one fewer pair that's brand new on the market. So that's one thing that people who are in the long term keep in mind, is that they recognize over the long term, one reason price goes up is simply because supply goes down. It just starts to disappear because people want to wear their shoes because they're sick. So people have tons of collections, and they might only wear some pairs a few times a year, but once you start wearing them, you can't sell them as brand new anymore. You can sell them as like new or close to new, but not brand new. So that's something to keep in mind. If you're looking into this, do you want to wear yours and then sell them as slightly used, mostly new? Or do you just want to keep them in the box, put them in the closet, and not even keep them on display? You don't want them to get dusty, right? You maybe look at them, make sure you do your audit when you get them, put them in the box, put them in the shelf, don't think about them. So as you can see here, this shoe most recently sold for $246. Now, it might look on the surface, hey, 260 minus 170, over 170, okay, that's a 45% increase. Well, 45% in 3 weeks, okay, that's insane, that's awesome, but we gotta remember fees, which are a big deal. First of all, your cost basis wasn't actually 170, right? So this is assuming you got it at retail, you got it at release, you were on top of it. Obviously you had sales tax on top of that. So we're gonna assume like 178.50, right, a 5% sales tax. And then also your selling costs to sell basically anywhere, whether it's Depop, eBay, StockX, it doesn't really matter. At the end of the day, between selling fees and payment fees, PayPal, you're going to be around 12%. So we're just going to assume 12%. It could be a little more, it could be a little less, depending on your account and whatnot. But we're going to assume a 12% cost basis for selling and transaction fees there. And then, of course, you had to pay sales tax. So really, at the end of the day, you did not make 45%, but you did make 21%, which is just astronomically amazing, right? In 3 weeks, being able to just buy a pair of shoes, then list them and ship them out. It doesn't take a ton of work. Now, it takes a ton of knowledge and research and understanding, but your actual work for this transaction is totally worth the money you're going to make there, right? You made roughly $35 on this transaction when you only put in 178. So this is totally worth it. It's definitely worth your time if you have the knowledge, and obviously not everything is guaranteed, right? You could have bought this shoe and then you had to resell it for $190, and then again, because of your high transaction costs, because of your high selling fees, you do lose money. So if you're not making at least 12% right out the door, you're done, right? You're already losing money. So you got to think about net profit, right? Plus, you also might have shipping on your end too. So maybe that 12% that we said, maybe it needs to be a little bit more, 12% plus $5 or plus $8, depending on what your shipping situation looks like. Whether you're doing this in big scales, so you can really afford to ship at a cheaper price, or you got the volume discounts, or if you have a small, you just go to your local post office, your local FedEx, and ship it. You're gonna pay more there, so maybe you want to reserve $10. So you got to recognize right off the gate, if you're into this, you got to make sure you really understand your full costs. But there's definitely money to be made, right? And again, this only took 3 weeks. You didn't have to buy this and hold this, right? It wasn't like you had this huge inventory and you have a big warehouse and you got to let things sit for a year. This was a pretty quick turnaround. So what happens if you do want to make this into an operation? So we're going to go ahead and assume that you could do this over and over again. That means you've studied the market, you understand all the releases, all the new shoes coming out, you're on top of it, and you have a hookup to make sure you can get it at retail, because a lot of these shoes just sell out instantly, so you're not going to get them at retail unless you have a hookup. I don't know if you can do bots to buy bots or whatever that looks like, or if you go to your local store, but you got to be able to get these at retail, and you say, I'm all in, I'm committed, I want to make this my big thing. What can this look like for you? So let's say you start with just $1,000. That's right. That's all you're gonna do. You're just gonna say, I'm gonna take $1,000 and see how far I can go with it. So you're able to spend all $1,000. Now I know it doesn't work out perfectly because you can't buy half a shoe or one shoe of the pair. You can't buy just the left pair. But we're just going to assume whole numbers here, and that you can always spend all the money that you make. So you can spend your full $1,000 on your shoes, and in the course of 3 weeks, we'll say a month, just for extra timing. We'll say over the course of a month, you can do this. And every month you can make 20%. So you said, all right, I'll invest $1,000, and at the end of the month I'll have $1,200. So now I have $200 profit. Right? And the next month you do it again, another $1,000 in, and another $200. So you could do this, and over the course of a year, right, you made $200 every month. You made $2,400 of profit with just the initial, and you still have your initial $1,000. So you turned $1,000 into $2,400. Or you do that over 2 years, and you made $4,800. So again, $1,000 now turned into 58, almost $6,000. Not bad over 2 years. That's pretty freaking good, if you ask me. That's some really good margins. That's way better than anything you'll get in the stock market. Obviously, it's we talked about there's a lot more risk, but that's a really good return. But where the real money starts kicking in is compounding, right? We've all heard the analogy of the person who invented the chessboard said, hey, just pay me a grain of rice on each board of the chessboard and double it each time, right? So there's 64 squares, and it's on the first square, give me 1 grain of rice. On the second square, I want 2 grains of rice. On the third square, I want 4 grains of rice. We've all heard this analogy, and by the time you get to the 64th square, it's more rice than exists in the entire world. The number's huge. You can see it here. So that number is just ridiculous, and that's how compounding works, right? Is that your investment growth is then growing again. So in our example, right, we had that initial $1,000, and then we made $200 profit the first time through, right, in that first month. Well, instead of just doing another $1,000 in month 2, well, we're now going to do $1,200, right? And so then our profit after 2 months of doing this, rather than being $400, is $440 because we made $200 in the first month and $240 in the second month, right? And the next month you make $288, and so now after 3 months of doing this, rather than making $600, $200 per month, we've now made $728 because we've been putting all of our profits right back in. We're not spending any of it. We're not saying, hey, sweet, I made $200. I'm going to go spend that and get buy myself my own pair of shoes. All right, we're saying, hey, we're going to keep it all in the business. We're going to say, hey, what can we do with that $1,000? And if every single month you're doing this, right, over the course of a year, well, now you've turned that $1,000 into $9,000, right, with rounding. So it's just insane. We talked about how good it would be to make 6K over 2 years. Well, you can make 9K if you do this for 2 years. Again, compounding. It's all about time, because every single month you go out, it's so much bigger. So back to the chessboard analogy, square 60 barely has anything on it, but square 64 just has all the rice in the world, right? So it's all about time, and the more time you can go, the better. So what looks amazing to be after 1 year turning $1,000 into 9K, after 2 years, $80,000, $80,000, right, from $1,000. Now this is assuming everything goes right and all of your shoes work and you can sell everything and you don't have any returns, and so you don't lose any money on returns and all that stuff, and different return fees and repacking and relisting and all that stuff. But that's pretty slick, right? I mean, if you can actually do that, that number is so big that it makes you ask, hey, this sounds too good to be true. And if it's too good to be true, it probably is, right? Even if the number is half as successful, if you turn $1,000 into $40,000 over 2 years, that is insane, right? You take $10,000 and you turn it into $400,000 over the course of 2 years, right? You're doing this full scale and you're all in and you are researching these markets all the time. I mean, again, it should just be your side hustle, but if $10,000 is enough that you have set aside and you still have the rest of your investment portfolio and you have $90,000 put into traditional debt and equity markets, you could have $10,000. You can make this a real operation, turn it into $400K or more, right? That's if you know what you're doing. That's if you understand the markets, and that's if everything goes well. Again, the real numbers would say that $10,000 would turn into $800,000 with this example. But assuming that not everything goes according to plan, and you take a loss on some shoes, and some shoes you said, hey, I really thought size 7 would work, and it turns out size 8 was the hot pair. And it turns out that's the one that really I should have gone all in on size 8, because sizing is a big factor too, right? Again, this isn't just a, hey, quick, get rich quick, all you got to do, it's just that easy, buy, sell. There's a lot of information that goes into this, because Nike, they know how many pairs of shoes to make in each single size. They understand who wears what size of shoes. It's going to take you a long time to realize and to learn what they're going to do, but in the meantime, especially if you don't have your $1,000 yet to get started with, start learning now. Start researching your market. Just really understand and say, hey, I'm going to start diving in and see what these resales go for. And you might already know, again, if sneakers are your passion, you probably already bought a pair on Depop. And you said, man, I got these sick Jordans. I had to pay a little bit more than retail for them, but I got them. At least I got them. Just keep researching. Learn, understand the market, and really know what you're doing. That's how you can hedge your risk. Right? That's how you can make sure to decrease that risk, because there is a lot of risk in any secondary market. But if you can decrease it through your own research, your due diligence, make sure you understand and you've really captured as much information as you can, then have a little fun. Experiment it. Start with one pair or start with a couple pairs, and go in, do it. And obviously over time you're going to have to diversify to hedge your risk and to decrease risk even more, and say, well, I'm going to buy some Yeezys, I'm going to buy some Adidas, I'm going to buy lots of different brands and different sizes and different makes. You got to do all that stuff to make sure that you're diversifying yourself. But this is possible. I mean, it's a real thing, and there's a lot of money to be made here if you know what you're doing and if you're willing to accept that risk and not let your emotions get the better of you. And you can't say, hey, I sat on this shoe for a month and I only wanted to sit on it for 3 weeks, and after a month it's gone up only 5%, so I'm just going to sell it and take my loss of 7% and just eat the loss. You can't let your emotions get the better of you, right? You got to be willing to say, hey, will I sit on this shoe for the long term? You got to set parameters and rules for your investment strategy and say, am I willing to accept that this money might stay flat? It might not have any gains. You might buy it for 170 and a year later it's reselling for 160. But then maybe 2-3 years later it's reselling for 250 and you can go ahead and make your money, and you still got a really good return. If you're making anything above 7% a year, you're doing all right. You're doing well. And so with that in mind, with that as your gauge, you can really turn this into a full operation and into a big thing if you're willing to accept the risk, if you can stay disciplined, if you can stay in the long term and say, yeah, ideally I flip every single month, but that's not the reality. A lot of pairs you just have to sit on and hope they go up over time, and recognize not all of them will. You're never going to get them 100% right. You're going to see a pair and you're going to say, everything I know, this color scheme and this size, last time we did this, it just went up so much, and it's 2 years later from your last time with that experience, and it's just a different market. The market's behaving differently. Maybe Nike pumped out more of that color and that size because they recognized how well it did in the secondary market and they wanted to tap into that a little bit, right? You never know. You're not going to know it all. You're not going to hit every single one, be a home run, but you can do well with this if you're willing to do the research, if you're willing to stay disciplined. Hope this is fun for you all. It's something a little bit different. It's a little bit fun. Again, I like staying disciplined. I like having conservative investment portfolios, but some portion you should have fun with. With some portion of your investments, you should say, I'm going to go all in and I'm going to really do my research, and I'm going to take 10%, 5%, whatever it is of your investment portfolio, and just have some fun in the secondary markets, in the world of collectibles. Do your thing. See you next time.